And John Bogle, of course, you know him from Vanguard, Princeton, and no shock here if we bring up the color of your book, Mr. Bogle. Don't Count on It. John C. Bogle, bright orange. What did you want to accomplish with Don't Count on It?
I'm trying to get people to be skeptical of the numbers that are thrown at us day after day after day. We take numbers as truth, and most of them are a long way from truth. Historical perspective means very little in the stock market because the past is not prologue, for example. And mutual fund returns are grotesquely overstated by the fact that about half of the funds that were in business at the beginning of this decade are now gone. And guess which half? It's the half that didn't perform well.
I think this is just a survivorship bias. This is a very...
Survivor bias, right.
Yeah. Let's look at page 104 on this. Bring up the quote from Don't Count on It. The broken circle, it is now crystal clear that our capitalistic system has experienced a profound failure, a failure with a whole variety of root causes, each one interacting and reinforcing the other. John, you're talking here about capitalism. You're suggesting American capitalism is broken. Expand on that.
Okay, well, what we have is the idea that a free market capitalism would work has failed largely due to the financial sector. You know, the idea of capitalism is competition to create better products and better services at lower cost in free markets. But the financial system has messed that up badly by basically taking over too much of the American economy. You know, it was only a few years ago that 33% of all the earnings in the companies in the S&P 500 came from finance. Well, financial system subtracts value from our society, and the productive part of our society is relatively shrinking. So that's one failure right there. And it's not just my point alone, Tom. It's talk about Judge Richard Posner, a very, very conservative guy out in the University of Chicago, a judge out in Chicago, federal judge, and he has a book called The Failure of Capitalism. So it's not just Bogle speaking here, and even Alan Greenspan said his basic ideas have failed.
I take your point. Let's bring up a chart here that is a picture for the rest of America, away from the East. Too much information, and it's a gentle chart. We'll see this tomorrow. Less confidence, less investing. And John Bogle, it's the University of Michigan Confidence Index, which is, any way you shape it, been in structural decline for a good 12 years. That really links right in with this distrust of capitalism, doesn't it? This lack of confidence.
Yeah, well, sure, and the lack of confidence is, of course, in a way, born of, in an important way, born of the fact that we've had a decade of slightly negative returns, one of the worst decades in the history of the stock market, and that doesn't build confidence. And then we've had, you know, this tremendous blow to public confidence when they see how insiders in Wall Street, investment bankers, banks, have taken these huge chunks out of the economy, paid no, you know, they're all back in business as usual, and the investors who paid for all this, we taxpayers, are worse off than ever.
John, do you suggest that there's an American plutocracy?
Yeah, I think so. I would call it oligarchy. And it comes from the tremendous power of money in our political system. And that power is not going to go away. And when we get into the regulations, which is a huge part of the Dodd-Frank Financial Reform Act, those lobbyists are going to be right there fighting over every single regulation. And so it's money taking over the system.
Oh, well, let's look at the money that we're trying to invest in, folks, and let's look at an index, maybe the foundation of the Vanguard work, a remarkable volatility, and this is an arithmetic chart. It's not logarithmic. I should use a log chart, folks, which shows percent change, but instead I use the regular old mountain chart. And John Bogle, it's from 1927, the S&P 500, and you know what, John? It's a pretty smooth curve, a pretty smooth series, until the last 10 years, which pretty much dovetails with what we just saw with the University of Michigan lack of confidence survey. What's the equity markets going to be doing in the next 10 years?
Well, what's happened, first, to be clear about the last 10, we started with an unsustainable two-decade period, the 80s and the 90s, where stock returns were doubled simply because the PE went from 10 to 20 to 40 times earnings. And the dividend yield a decade ago was down to 1%. And you're not going to get much of a return on stocks if you start with a 1% yield and a 40 PE. So we've come kind of back to normalcy, if you will, in the stock market. The next 10 years, however, we're starting at a better base.
Right.
The yield is 2%. That's not high, but it's double 1%. And I think we should be able to get decent earnings growth over the next decade, maybe 6-7%. Because corporate earnings should grow at the rate of America.
John, you mentioned the University of Chicago, and folks, earlier this morning on Bloomberg Surveillance, I spoke with Randall Krasner of Chicago, the former governor of the Federal Reserve, and I asked him about the next 10 years, about productivity growth.
Productivity numbers have been very strong. Productivity is measured in the amount of output per hour of work. And even during the contraction period, we still had positive productivity growth. And it's been reasonably strong even coming out. So some people who talk about the new normal say that the engine of production is broken in the U.S., and I simply don't agree.
John Bogle, that was Randy Krasner of the University of Chicago. So productivity is the answer. John Bogle, do you invest in America, or do you find greater productivity abroad?
Well, I find investing in America does fine, but with a big caveat. And that is, if you look at the S&P 500 or the total stock market index in America, almost half of their revenues and half of their earnings come from abroad. So you already are investing abroad, and I think that's fine. I'd also say this, when you think about what's abroad, you have two groups: the developed non-U.S. markets and the undeveloped. And the developed markets, well, you've got Britain, you've got France. They don't look like they're doing so well. You've got Italy and Spain and Portugal and Greece. They don't look like they're doing so well. And basically the only country in the developed market index that's doing well, I won't even comment on Japan here. The only developed country that's doing well is Germany. So, there's their own set of risks. And I also, to be quite blunt about it, look at the market, the financial markets, as being a great arbitrator between the past and the future. So things are probably being fairly valued, and the best bet for the next decade is that U.S. and developed markets will perform at about the same rate.
Well, John Bogle,
thank
you so much. John Bogle, of course, for years associated with Vanguard, and his great commitment to the Constitutional Museum in Philadelphia as well.